Imagine walking into a marina and seeing a sleek catamaran for sale at a fraction of its former price. It feels unreal. Just a few years ago, the catamaran market was booming, with buyers scrambling to snag Lagoon 46s, Leopard 50s, and similar models at sky-high bids. Suddenly, everything has changed. In this deep dive, we'll unpack the surprising market crash, how a flood of boats hit the market, which models have fallen the most, and the buyer mistakes that made things worse. We'll even compare what's happening in the US to Europe and end with practical tips on spotting the best deals or avoiding pitfalls now that catamarans are so cheap. At the height of COVID-19, sailboats and catamarans became a status symbol, an escape pod when travel was locked down. Demand surged while yards were starved of new boats, so owners paid huge premiums. As one market study recalls, many first-time owners paid $1 to $1.5 million for mid-size catamarans like the Lagoon 46 or Leopard 50 during the pandemic. Dealers happily inflated prices, sometimes adding $400,000 on top of list price, and buyers were told that lucrative charter income would offset these costs.
But this was a bubble. When pandemic restrictions eased, that hot market flipped. Suddenly, lots of owners who barely used their boats wanted out, the so-called summer plop effect. Charter fleets that had ordered boats during the boom began retiring them after just 5 to 7 years. Dealers, flush with unsold stock, started slashing discounts on new boats, which in turn pushed used boat prices down further. In short, the winds of fortune shifted dramatically. Across the country and around the world, marinas and broker sites are now overflowing with catamarans. Supply has exploded while demand has contracted. For example, data from industry analysts shows hundreds of catamarans listed for sale in the Caribbean and US, but only a fraction of that being bought. One report found 387 cats for sale in the Caribbean with just 92 sold in 2025, barely a 24% turnover rate. Worldwide, there were about 2,100 used cats listed, 71% of them under 10 years old. Even in the US, where sales are relatively stronger, 380 cats were offered and only 233 sold in 2025. This glut is unprecedented. During the boom years, factory backlogs and limited charter capacity had kept inventories low. Now, private sellers and entire charter fleets are dumping boats all at once. At the same time, lingering high interest rates and economic caution have shrunk the buyer pool. As a result, experts warn that up to 30% of the currently listed yachts may never find a buyer. In practical terms, a dealer might list a used Lagoon 42 at $700,000, not expecting to sell it, but to use that listing as bait for new orders. In other words, unless prices come way down or people hold on to their boats, many boats will sit unsold for years. Prices have tumbled across the board, but some boats took the hardest hits. In broad strokes, mid-size blue water cats that peaked at $1 to $1.5 million are now worth about half that or less. For instance, a 2020 Lagoon 46, once around $1.2 million new, is now fetching only $450,000 to $500,000 on the resale market. Similar plunges hit Leopard 50s, Fountaine Peugeot Helios, Bali 4.1s, Nautatech Open 40s, and other popular models. Ex-charter versions, often 4-cabin layouts, have devalued even more sharply. One analysis notes a 7 to 8-year-old Lagoon 42, 4-cabin charter spec, sold for under €250,000, down from about €300,000 not long ago. By contrast, private owner, usually 3-cabin versions, have held value slightly better, as demand is higher for them now. In short, many cats are now roughly 50% off their COVID-era prices. Brand new models aren't immune either. As dealers slash list prices on new boats, that creates a new benchmark that drags resale values down further. Even shining examples in mint condition sit longer and sell cheaper than a couple years ago. One boat shed broker notes that buyers often see two identical boats online, one listed at $800,000 and one at $400,000, and the lower one becomes the market reality, not the sticker. The wildcard fuel for this crash is simple math. There are more cats chasing fewer buyers, so prices have to give. Here are some common buyer mistakes that backfired. Overspending at the top. Many owners got rich charted into spending huge sums at the market peak, only to see their boat lose most of that on resale. First-time buyers in particular underestimated costs and overestimated resale stability. It was common to think, I paid X for this boat, I should get nearly X back. Reality check. On average, sellers end up cutting their price 28 to 30% before closing. Believing broker hype. During the boom, some brokers inflated resale values as bait. They'd list a used cat at, say, $900,000 to attract owners, all while steering buyers toward new models, where their commission is higher. Buyers who didn't look at actual sale records got a rude surprise when no one paid those fantasy prices. Counting on charter profits. A big myth was that charter income would cover ownership costs. Brokers sold that story to justify prices, but in reality, the hire car effect hits hard. Buyers discount charter boats heavily, assuming heavy use. People who bought X charters without a big discount ended up with a boat that felt worn out and overpriced. Forgetting depreciation. Reality. Unlike real estate, boats will depreciate predictably. Smart advisors remind us that a luxury yacht loses roughly 30% of its value in 5 years, 50% in 10. Many buyers ignored this, seeing their cat as an asset instead of a consumable. By now, that hangover is painful. That Lagoon 46 owner who paid $1.2 million is looking at an approximately $650,000 paper loss in just a few years. Over-improving the boat. It's tempting to spend on upgrades thinking it boosts resale. Unfortunately, those extra solar panels or designer cushions often create only phantom equity. Boatshed warns sellers that expensive upgrades rarely translate to higher sale prices. A $50,000 refit might make you happy afloat, but won't add $50,000 to what buyers will pay. In short, many who bought at the top were simply unlucky or overeager. The market has now flipped from bidding wars to bargain hunting. Anecdotes abound of people waiting months for their overpriced listing to sell, then grudgingly accepting a steep markdown just to close a deal. This crash isn't just a U.S. story, but the U.S. market has its own twists. International data shows Europe and the Caribbean are also awash in cats, often to an even greater degree. For example, in the Med and Caribbean, the number of boats listed far exceeds local demand, so analysts estimate about 30% of those listings will never sell. American sailors used to buy overseas bargains, but now almost 50% of global cat buyers stay in the U.S. A strong dollar and new import duties meant Americans stopped importing, so excess European inventory can't easily move. On numbers, the U.S. market had 380 cats listed in 2025 versus 2,100 globally, but the U.S. managed 233 sales, about 61% turnover. The Caribbean only sold 24%. This suggests America's bigger buyer pool helped soak up some inventory, even if prices still fell. By contrast, Asia-Pacific regions haven't had as large a catamaran bubble, they lean more on motorboats, so the shock there is less documented. Overall, though, the theme is universal. Too many boats, not enough buyers. One interesting note, Europe still leads the global cat market, 63% share, and charters are very robust, but even there resale is soft. Meanwhile, smaller boats, less than 35 feet, are seeing more stable demand and falling prices. It seems buyers who can no longer afford big cats are looking at trailerables and day sailors instead. The takeaway is that, whether in Florida or the French Med, yawl or cat owners have woken up to a new normal. Despite the gloom, there's opportunity in chaos, as long as you stay savvy. Here are some takeaways for anyone looking at catamarans now. For buyers, shop carefully and price shop. Use actual sale data, not just internet listings. Brokers say well-maintained private owners' boats are now the best deals, because they often price fairly. If you consider an X-charter, insist on a huge discount for wear and tear, otherwise you'll overpay for trouble. Remember that most cats can't sell at last year's prices, so make offers around today's market, often 30 to 50% off peak prices. And double-check costs. With higher interest rates, calculate long-term financing carefully. For sellers, reset expectations now. Most sellers are having to cut their prices by tens of percent to sell. Be realistic from the start and highlight your boat's upkeep. This might mean listing closer to actual recent sale prices, in line with that 28 to 30% markdown data, or being prepared to hold on to the boat as long as needed. General strategy. If you love catamarans for the lifestyle, low prices can be a silver lining. You can afford better amenities now. Just focus on reliability. Check maintenance logs. Engines have age, hulls need inspection, etc. Factor in ongoing dock and insurance costs. And remember, depreciation is real. One smart tip: demand seems relatively better for certain layouts. 3-cabin cruisers, for instance. So if you have flexibility, target those models. Also, watch the smaller boat scene. Some buyers are trading down in size, which could keep resale values of popular cat classes a bit firmer. Think of today's market this way. The poker table has changed. If you've got cash or good financing, you have stronger hands than half the players who folded under last year's prices. Patience and good info will pay off. As one industry expert concludes, yachts are for freedom and enjoyment, not for capital gain. The best buyers now know they're sailing for life, not looking for an investment return. In just a few years, catamaran ownership went from a gold rush to a buyer's market. Surprising as it sounds, this crash was a long time coming. A pandemic boom built a tower of inflated prices and back orders. And once the tide turned, the tower collapsed under its own weight. Today's reality is stark. Many catamarans have lost around half their value as brokers and manufacturers quietly taper off the hype. What matters now is to be clear-eyed about depreciation and to buy or sell with facts on your side. In the end, those cats still float the same as before, but their price tags have sunk. For passionate sailors, this means a chance to get a bigger or better boat if you play it right. Just remember the lessons. Question the old assumptions about charter income and resale, use real sold price data, and enjoy the boat for what it is, a lifestyle asset, not a retirement fund. Now is a unique moment in the market. If you move carefully, you can emerge sailing even stronger as the market normalizes. Fair winds and following seas.